Good morning and welcome to this week's PFL podcast. I'm Curtis Chandler and we've got a lot to report on this week. Last week, the Iran ceasefire framework finally took hold and crude unloaded some of its war premium. The new Trans Mountain pipeline in Canada is nearly full and is headed towards appropriation, with both major Canadian egress pipelines full at once. The SDP accepted the UPNS merger application and immediately put it back on hold, and CP's signal and communication workers walked off the job Sunday morning. Equities closed higher across the board on Friday of last week. The Dow was up 452.51 points a week over week. In overnight trading, Dow futures are trading higher and are expected to open up 185 points from Friday's close. On crude, WTI closed lower on Friday of last week and lower week over week, finishing the week at $87.69 per barrel, which was down $8.91 per barrel week over week. WTI is poised to open up $3.39 per barrel from Friday's close. U.S. commercial crude inventories drew 3.3 million barrels week over week. The standout, though, is distillates, which fell to 91.2 million barrels in storage, the lowest since November of 2014. North American rig count was up by 28 rigs week over week, with Canada adding 24. Of those, year over year, we are up 49 rigs collectively. Rail volumes were strong. Total North American weekly rail traffic was up 7% in week 22 compared to the same week last year. 11 of AR's major traffic categories posted year-over-year increases, with grain leading the way and coal was the lone decliner. Now on what we are watching out there for you. Starting with Hermes, the Iranian ceasefire framework moved closer to a durable extension last week, and Brent posted its worst month since COVID and collapsed nearly 19% in May. Tankers are transiting again under Iranian protection at volumes well below pre-war levels. PFL is not calling a bottom or a top on this one. There's a lot to play out still. Overdam Bridge mainline appropriation in June is the highest since before TMX started up, and TMX itself is heading towards appropriation for the first time since the expansion came online. Both major Canadian egress pipelines are effectively full at the same time, a setup we have not seen in 2 years. The rail economics aren't quite there, but it's going to get interesting. Up in Ottawa, Carney's position on Alberta is now formalized in 3 words: no pathways, no pipeline. The carbon framework is set out through 2040, and we believe the September 2027 construction date is in question. Perry Connector got its commitments. South both secured a binding tonnage needed to March open season on their pipeline. The durability of the permit is real, however. The Jones Act waiver continues to bite. More than 60 foreign flag movements between U.S. ports since March, including at least 6 crude cargoes. The waiver runs through August 15th. Every gallon that moves coastwise is a gallon that does not move by rail or pipeline. The STB accepted the revised UPNS merger application on Thursday of last week, then immediately put the entire process on hold. PFL is unconvinced this merger gets across the finish line and the timeline UPNS originally wanted. Closing out the CPKC's strike is on, and hopefully there's a resolution quickly on that one. The railroad has activated contingency plans, says service is continuing, and it publicly pushing for binding arbitration. That's the report this week, and always PFL is here to help. Give us a call on storage, railcar cleaning, nitrogen, repair, transloading, and we do it across North America. If you found today's report useful, please share it with a colleague. Thanks for listening, and be safe out there.